Sup. Alright, today we're going to talk about Saturn protocol, another STRC protocol. I think it has a more elegant design, but I'm not sure will the ROI be better if you farm it. Alright, so this protocol is invested by Binance Labs, known as Easy Labs now, Spartan, Soros, all the big names. And it has the support of Saylor. You can see it doing reposting this tweet, reposting like their strategy on Strata, etc. So the protocol is around like 6 weeks or so, currently at 103 mil TVL. They have two components as well, which I can go into more. The reason why I like this is because it's USDAT does not have any exposure to STRC, and it also has a risk engine where it deleverage as the risk of like MicroStrategy goes up. But yeah, I can go into the detail more. So before understanding this, you will have to understand how does STRC works. I have spoke about this in my last video about APYX protocol. You can feel free to click on the link here to see the detail. But TLDR, it is a yield-bearing bond that drives MicroStrategy by and it generates approximate 11 to 13% yield. Here's what I like about Saturn and why is it different from other STRC protocols. Saturn has two tokens. The design they made is to have isolated risks. There's USDAT, the dollar value. There's SUSDAT. So USDAT is the dollar layer. It's a stablecoin backed 100% by US Treasuries through a protocol called M0. There's no STRC risk and exposure, pure treasury. If you hold USDAT, you'll have zero yield though. So you can stake your USDAT into SUSDAT, which will start earning you the STRC yield, which is currently around 9.8% from dividends. There are also various strategies you can do with these, which I can go into a little bit deeper later. The elegance of this design is that it allows users to pick what risk they want. Do they want exposure of STRC or not? And technically, if STRC goes to zero, which I don't think it will, if you're holding USDAT, supposedly you'll be fine as well. So let's talk about how the money flows, right? You can deposit USDC, it will go into M0 swap, they will mint the USDAT, the USDAT will be backed by the Treasury T-bills. You can optionally stake it into SUSDAT Vault. By staking it, you should be able to earn 9.8% APY right now. This might change depending on the future. The whole architecture of Saturn is that the risk is isolated and it's a lot safer. So if it was able to scale up, I think it might be a better protocol. Another risk factor that they have is called the dynamic reserve allocation. So strategy is a leverage of Bitcoin, right? So as the risk goes up in the strategy, as the Bitcoin goes down in price, they actually lowers the treasury and to be more safe. I'm not going to go into details of this, but as this graph you can see, basically, if there's more risk in MSTR going to shit, it reduces the exposure essentially. This might not be the most yield efficient thing to do, however it reduces the risk. So everything looks like by design is to be safety first. So how does USDAT keeps us back? First is 100% treasury back. Secondly, there's a whitelisted market maker that gets the arbitrage through the redeeming way, and also there's a curve pool that allows users to trade in and out of. Very typical stuff. So let's compare Saturn to APYX, right? In terms of the Saylor connection, right? Because this is supposedly important in terms of like the potential ROI in my opinion. Saylor featured the CEO on the strategy, they had a video, etc. Saylor retweeted APYX 4x. I mean, like support wise, both is similar. Depends what you think is more bullish. It might be a marketing coordination or just luck, right? But yeah, here's your speculation. Here's your own speculation on this. So currently, where are the USDAT and SUSDAT live on chain? Up to around a few days ago, these are the distribution. Pendle has around 36 mil, Morpho 32 mil, Curve around 25 mil, Strata about 5 mil. Pendle basically splits any yield-bearing token in two pieces. PT, you buy at a discount and then you can redeem it at full maturity. your fixed rate is basically pay. YT, which captures all the variable yield to maturity, then expires at 0. It's almost like your leverage yield bet. So right now, on Pendle, you can either earn a fixed APY of 9% on USDAT and fixed yield on SUSDAT on a 12.5%. Because like the current yield right now is 9.8%, so that means the users or the farmers are pricing the airdrop around 3% right now, or the market might be pricing it wrong depending on how you see this, right? But we can go into the points calculation and potential ROI later. The second DeFi layer that is more interesting is strata markets. So essentially, strata markets put yield-bearing assets and put it into two tranches. The two tranches is called the senior tranche and the junior tranche. The logic is very simple. It's basically like the senior tranche get less yield, but they get paid out first if anything happens. So low risk, lower ROI. And then the junior tranche will get like the more yield and potential, like if the yield goes up, they'll capture that as well. But obviously they'll get paid after the senior tranche get paid, meaning that they take on more risks. I've made a flowchart of what might actually happen here, so you can have a look and see how that goes there. If you go to their website right now, you can also see like the TVL, what they're getting, some of the points and etc. that you can get from this. And for Morpho, it's just the typical leverage, keep on looping, etc. I'll let you guys figure it from the thousands tutorial that's already online. Here are some of the strategies that I ranked. For example, what are the points? How does it work? What are the risk levels? I've also made a chart here from low risk to high risk, and also for green colors, meaning there's no STRC exposure. Orange means there's STRC exposure. Red is basically like leverage or loss first, or if there's a time decay on the assets. Okay, let's talk about the points game, the calculations. Saturn runs Season 1 gravity points from April the 8th till August the 8th, or 500 mil TVL, whichever goes first. Saturn may allocate up to 5% of the initial token supply for S1 participant. The catch is the token doesn't exist, there's no name, no supply, no TG date, etc. etc. They also added this line in the Gitbook will say there's no monetary value or redeem for cash, and Saturn reserves the right to motivate the program at any time. So if we assume like 100 mil FDV at a 5% allocation, these are some of the FDV. I'll share a little bit more on my thoughts on this, but TLDR I don't really like about this, because in terms of like ROI, this sounds like it's a points program that are relatively capped. Okay, let's talk about the risk, right? The risk here is pretty similar with APYX, which is the centralized risk, right? And the structural risk. Let's talk about the structural risk first. STRC depicts MicroStrategy in stress. If it drops, like the whole thing might fall. The yield might drop. The good thing about this is they isolate the USDAT to SUSDAT on this, which I think is great. Position specific risk, there's a 3 to 7 day withdrawal. If there's anything any hacks or thing that might affect it, it takes 3 to 7 days, but it's better than the 20 days of APYX. So this is my take on this. So I think Saturn has a very elegant and safe design. Architecturally, it looks better than APYX, or more say like APYX is more focused on yield and Saturn is more focused on risk management, which will help them if the protocol does scale higher, only if it scales higher. You get to choose your risks, where APYX blends it all together. But again, it's back. This is everything depending on execution of both teams on growing the protocol. I'm not going to go into all the detail on why is it better, but you can read it on my Substack. But in general, better design doesn't mean better returns, right? You can see first on the yield side of things, because it's safer, so the yield is lower. Also, I don't like how they're phrasing the points program in terms of ROI. First is Binance, right? Binance is good. You're more likely to get listed, but this also means like Binance is likely gonna ask you to give you a portion of your token for Binance Airdrop. So if they weren't able to get like let's say Athena level, they wouldn't have the leverage, the bargaining leverage to reduce the Binance airdrop, or they wouldn't be able to do like a special deal or basically a better thing. So you can imagine like if we farm very hard, but the airdrop might be end up giving it to the Binance hodlers or the BNB stakers as well. I'm excited for DeFi in general because this is something that is sustainable yield, allowing structured credit, allowing Strata, allowing Pendle to build on top of it. It's not just pure points anymore. It's a yield bearing that moves and points on top. So hopefully this will be a turning point for Strata as well, and also like these type of like yield bearing bonds or let's say wraps will be able to fund this more in the future. However, as you can see, there's more and more like levels to this STRC now. Like STRC is already a level of like I would say basically like C5 DeFi related thing, and then having more and more things on stacking on top can be risky, but at least I guess the risk is quite exposure. This is not a Saturn specific risk, it's more like a STRC ecosystem risk, so you need to think carefully, is this something you want to farm in size? I mean like, yeah, I mean, I think this can make a new narrative in DeFi, in potential maybe like 3 to 6 months to 9 months down the line when Bitcoin makes all-time high. This might be a narrative for good token play, but is that something you will farm, or you will just use smaller capital to buy YT, to buy the points, etc.? I don't know yet. So who is this actually for, right? Like Saturn, it serves more like the investor profile, for like big scale investor profile, because of its clean separations. For example, like I want yield but I don't trust STRC. I want STRC yield but I don't want the full downside. I just want the yield and I want some exposure to people who make these protocol for STRCs, right? Or like toxic farmers that want to go degen mode and earn some money, right? The last thing is, I like the protocol, I like the design, I like how they're executing, they understand DeFi, they have got all the integration good and set. But just like most smart DeFi guys, right, the terms might not be the most favorable for farmers. The wording they use in the gig bulk make me worry that is something that they would take back up to 5% of initial. They can't even commit to a percentage compared to APYX, right? Which I think is fair. It's okay. It's just a decision, right? Like they care about their token supply, which can be a good sign as well. But like from wording point of view, APYX sounds a lot more good in terms of reward. They have some disclaimer as well. Yeah, I'm not going to repeat this, but you can read this. This is basically my view. And I think this is why their TVL is 105 mil and APYX is 277 mil. You can say this is because of aggressiveness and that's why their token might worth more in the future. But let's see. My position right now, this is more like a why not farm it, but not going hard farm. I mean, PT is good. I don't know. I'm going to throw in like 5 to 10k just to get some small exposure for now. It's just because I off-ramped a bunch of money. I'm on-chain broke right now. So let's see how this goes. I think this is one of those protocols that if this scales up to, let's say, 500 mil TVL, 1 B TVL, this is something that might be more comfortable farming. Like, it's one of those growth that where it doesn't go like that, but it goes like that kind of thing. But yeah, no financial advice, DYOR. I hope you like this type of new content I'm doing more. And yeah.
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.